Hi there. Zoom just reported a blowout first quarter results the past week. I'll be studying the financials, technical analysis, and business outlook for Zoom in this video on Zoom stock analysis. So let's dive right in. This is the latest quarterly cash flow statement for the period ending 30th April 2020. The financial numbers for the same quarter ending 30th April 2019 is included here for comparison. Now, the revenue came in at about 328 million and the gross profit was about 103 million. That gives a gross margin of 31%, which is a decent margin. The research and development costs were 26 million, sales and marketing 121 million, and general admin at 53 million. This leaves 23 million in earnings before accounting for interest and tax. The earning after attributing for interest and tax is 27 million. This translates to a net profit margin of 8.2%. These are really decent numbers. I also like the fact that Zoom is continuing to invest in research and development to improve their product and service. The sales and marketing cost is about 37% of revenue and is quite high. I believe this is due to Zoom actively promoting and marketing to acquire new customers and capture the market share. This number will likely come down in the future as Zoom establishes itself as a market leader and less marketing will be needed at the time. In comparison to the same quarter in 2019, the percentage was 53% of revenue. So the percentage of sales and marketing component against the revenue is lower than in 2019. The 2019 full year financial report published in March 2020 includes this table with a set of key financial data. It is a good data set to study the trend of the financials. So I updated the latest numbers for this quarter in this table like so. This gives a clear side-by-side comparison. The revenue and the gross profit has been growing steadily over the last few years since 2018. Though there were a few quarterly losses from operations, and the recent one was in October of 2019. The last time Zoom had a net income loss was in October of 2018. The trend is suggesting a general growth in profitability. There is probably an element of help due to the current COVID situation, but Zoom has positioned itself well and is benefiting from it. The earnings per share reported here is based on GAAP method. However, note that Zoom's financial outlook for the next quarter is based on non-GAAP method, so I'll be using that method from here on. When the GAAP and non-GAAP method is reconciled, the earnings per share is higher at 20 cents compared to 9 cents for the GAAP method. The difference is due to the stock-based compensation expense of 30 million, which is a sizable number. The balance sheet is healthy. I did not find any signs of weakness. Zoom has a strong cash position and will be able to fund its operations without any cash flow issues. The only point to highlight is the marketable securities over here. The report states that these are high-grade commercial papers, bonds, and T-bills. The concern I have is although these are high-grade notes, they are still susceptible to market fluctuations. And with the current market conditions, there is a certain risk that it will lose some or large portions of its value. The current liabilities has also increased mainly due to the accrued expenses and deferred revenue. Accrued expenses is expenses that has been committed to but has not been paid. Deferred revenue represents income that has been received but the services have yet to be delivered. This will include things like yearly subscriptions to Zoom. Zoom is forecasting for a revenue of between 495 million and 500 million in their financial outlook for the next quarter. That is a 52% increase from the current quarter. The income is expected at between 130 million and 135 million. That is a 128% increase from the current quarter. The earnings per share is expected at 44 cents and 46 cents. An increase of 130% from the current quarter. Are these numbers realistic? I think Zoom is well positioned to hit these targets. Now the current PE ratio based on the earnings per share for the last 4 quarters is almost 400. The projected PE ratio based on Zoom's outlook for the next quarter will be 233. That is way too high even for a tech company. The price to book is almost 68. Based on this, Zoom is a grossly overvalued stock at the current price. Let's look at the charts to understand the price action. I always look at the biggest time frame to get a helicopter view of the price. Right off the bat, it shows a parabolic rise right over here. Clearly, the price was being chased to higher levels, and there was a strong move to the upside prior to the reporting of the blowout results. And the price has since come down by about 8% after the results were released. We can draw a trend channel for this entire move up. Zoom price broke the top trend line and has since closed right below it. Let's study this parabolic move in greater detail. We can also draw a trend line to capture this parabolic rise. This trend line has been broken the past week and it looks like it is consolidating. The key now is this mini trend channel in green. There is not enough data to suggest a reversal or continuation at this point. We will need to see what happens in the coming week. I'll be watching this green trend channel to see whether the price breaks to the upside or to the downside. The business outlook for Zoom is looking good. I feel that a market leader is being established here. Zoom is fast becoming synonymous to meeting, just like Google is to search. And Zoom is doing a fantastic job stepping up to the plate as the market leader. These are images I captured from the Zoom website. A culture of virtual meeting around Zoom is being established. I did not see this level of take-up with Skype. Skype caused a buzz, but it was short-lived. And even now, after many years, Skype is still grappling with bandwidth issues. I personally use Skype for business and Zoom, and I've had many disruptions when using Skype. I've not had any issues with Zoom so far. But my personal experience aside, Zoom has a widespread adoption from across the industries such as education and healthcare besides businesses. Most of the customer comments are related to ease of use, reliability, and accessibility, and how Zoom has made it possible for their customers to communicate with their partners via virtual platform. So is Zoom a good buy? My view is Zoom is a very good company. It has a great product and is doing all the right things. They are growing rapidly and have proven to be profitable. They are certainly a growth company to be invested in. The financials are looking good too. They have a strong balance sheet and positive cash flow from operations. However, Zoom is grossly overvalued at the current price of 207. The price to book ratio is 68 and PE ratio is 400. Even using the earnings per share forecast for next quarter, based on the outlook provided by Zoom, the projected PE ratio is 233. Personally, I would wait for a drop to a more reasonable level before investing in Zoom. I hope that this video on Zoom stock analysis has been useful, and I hope I have earned your thumbs up. Please do subscribe to my channel and hit that notification bell so that you will be notified when I post the next video. And I'll see you soon in the next one.